Hello, everyone. Happy Saturday, and welcome to this educational presentation, where today I want to talk to you about the second component of a consistent strategy. Now, if you remember last week, we talked about the first component where I went into some detail on showing you how you could apply that right away. Well, in today's educational presentation, I'm going to share with you another edge that when you combine both of these two together will really increase your odds for a consistent strategy. And it will generate setups just like the ones you're seeing right here in this older chart of BIDU. Now, you have access to these right now at your at this very moment. You can actually use these two tools, which I'm going to be sharing with you today. But it really is a lot simpler on our platform because everything is one click away on the PTS Primo charting platform. And I'll show you that as well in today's educational presentation. So thanks for joining us. Thanks for taking time out of your Saturday morning. Welcome. My name is Steven Primo, president and founder of Specialist Trading. About 12, 13 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders around the world. So we are different from other webinars or websites you may have attended in the past, in the fact that our only goal is simply to educate you. We're not going to tell you what we think certain stocks are going to do or what the market's going to do or what we think, what the perfect time frame is for you. Those are things you have to decide. The reason why most traders don't make their decisions on their own is because they haven't been educated. So if you don't have the education, if you don't have the knowledge, then what do you most likely do? Well, you blindly follow someone, right? You just go to their website and take their, signals, their nightly signal service, or you go to the chat room and find out what they like or don't like, and you just mirror whatever they're saying. Or you listen to the so-called trading gurus on TV to find out what they think the market's going to do or what they think of a certain stock. This is the way most traders are trained, myself included, when I first started 4 decades ago. And this is why, in my opinion, most traders fail. So what you have to do is educate yourself so that ultimately you can make your own trading decisions. And this is our goal, to educate you as traders. And I'm glad to say we have students in over 115 countries and in every state around the United States. So hopefully we're being able to change some traders' destiny and turn them in the right direction. Now, before we begin this educational presentation, we are required to first share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results and show you some updated charts, sharing with you these two edges, these two components today. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are an educational company, all examples are strictly for educational purposes only. Now, if you haven't done so already, here's your chance to follow us on Twitter. Once again, there's our handle right there, abbreviation for Specialist Trading. I post different educational bits on a daily basis, I should say, anywhere from little bits of financial wisdom to actual snapshots of strategies that have generated signals in the past day or so. So lots of great free education on a daily basis. Once again, please feel free to follow us on Twitter. So as I stated earlier, we are first and foremost an educational company. Our goal is not to tell you what I think the market's going to do. I don't know if it's going to keep going lower, or if it's going to bounce and go straight back up. I don't know what the perfect time frame is for you. I don't know what the perfect stock or currency pair or future is for you to trade. Those are things you have to decide on your own. Think of any hobby, think of any endeavor, think of anything you want to learn. You need a teacher or a trainer or someone to point you and steer you in the right direction. But ultimately, when it's time for you to actually apply those things, you have to make your own decisions on your own. Someone wants to teach you how to swim. Sure, you can get a swimming coach to teach you, but ultimately, once you jump into the pool, it's you who have to start swimming. And that's the same way with trading. I can teach you, I can show you things with high levels of consistency, but our goal is not to force feed you signals. It's not to tell you what to buy or sell. It's to teach you how to trade with a specialist edge. When I was struggling 4 decades ago, my mentors taught me the same way, and hopefully I will be able to sustain you the same way my mentors sustained me. Now, once again, this is an educational presentation today, so please, I like to take your questions, but at the very end of class. So if you have a question, write it down and try to remember it. I promise I will get to it at the end of today's class. The only question I will answer, is this being recorded? Yes, it is. We record all of our Saturday webinars, so each and every one of you will get a link to this recording. You can study it at your own leisure and watch it over and over again. Now, announcement before we begin. Once again, we are on Zoom, but this isn't your normal interactive Zoom meeting. This is a webinar. So please disable all of your cameras and microphones. This isn't the type of thing where we're going to be talking and interacting with one another. This is a static PowerPoint presentation. And so I just want you to watch it as a student so that you can learn, but there's no interaction with cameras or with microphones. This is not a Zoom meeting. This is an actual class, okay? So if you could disable all cameras and microphones, highly appreciate it. All right, with that stated, let's begin today's educational class, and let's begin with a review. For those of you who weren't able to attend last week, I talked about the only statistic I ever look at. Now, this actually went into the first component of a consistent strategy. And for those of you who have gone to my webinars before or heard me speak, you know that I do not follow or believe or trade with statistics. The reason is because years ago I did that. I even taught systematic behavior in trading that relied on statistics. And when the market changed environment, most specifically in 2008, all of those statistics went out the window. It didn't matter if they went back 20 or 30 years ago and they were phenomenal statistics. They all went out the window. So the great lesson I learned was that, statistics can work until they stop working. So it's okay to follow them or to look at them, but to rely on them is something entirely different. Therefore, I really don't put a lot of emphasis or focus on statistics. I put emphasis or focus on market behavior, on what's happening at the moment. Now, there is only one statistic, though, that I constantly look at and I believe in, and that has never failed in the 40 years that I've been trading. And that is this one. 80% of all traders will ultimately fail or lose money. And once again, that does not mean you'll go into a series of losses and then you'll be able to recover. Basically means that you will be able to lose all of your money. So what that really means is that all of the money you've set aside for trading will be gone. All right, that's 80% of all traders. That means that 15% of all traders will ultimately just break even. All right, that's okay. You won't lose any money, but you'll be putting in a lot of hard work and effort, and you'll just be trading water. So ultimately, it means that only 5% of all traders are consistently profitable. If you have 100 people here today in today's class, only 5 of you will be consistently profitable. So you have to ask yourself, well, why is it that only a small amount of traders are able to be consistently profitable, can catch these profits? Well, it really is simple. These traders, whether they know it or not, know the importance of being in sync with the market. See, that's what it's really all about. You have to be in sync with the market. Doesn't matter what system or what strategy you're trading, does not matter what market. But if you're out of sync, you're going to lose money. If you buy something and it goes down, doesn't mean your strategy is faulty, doesn't mean it doesn't work. It just basically means that you're out of sync. The first step is to be in sync. If you sell something short, thinking it's going to top out and go down, and it continues to go higher, doesn't necessarily mean that your idea or your method is wrong. It means that you're simply out of sync with this particular trade. So the most important thing you can do, trading 101, is to be in sync with the market. Now, there are 2 components to doing this, and you can do this right away. You don't have to buy anything. You don't have to research anything. You don't have to construct any indicator. You have access to it right now, and that's what I talked about last week. Component number 1 is the buy-sell line. All right, before you think it's something you have to construct or go out and buy, no, you have access to it. It's the 50-period simple moving average. It's that easy, but you have to plot a 50-period moving average on every chart you're looking at. I don't care if you trade weekly bars of Bitcoin. I don't care if you trade tick charts of the E-mini futures. It makes no difference. You should always have a 50-period moving average plotted. And before you pull the trigger, before your system, before your method tells you to buy or sell, you should always ask yourself, where is price in relation to that buy-sell line? Because if you ask yourself that before you pull the trigger, before you buy or sell, you'll only come up with 2 possible scenarios. Because if price is above that 50-period moving average, then you should only have a buyer's bias. And if price is below, you should only have a seller's bias. Another way to say this is that if you get a buy signal with whatever method you're trading, say you bought this $10,000 method that never fails, the statistics go back 20 years and it's always right. But if that buy signal is below the 50-period moving average, the odds are it's not going to work out, or it's not going to be that favorable. And conversely, if you get a sell signal, I don't care what it's based on. I don't care if it's based on news. I don't care if it's based on statistics that go back half a century. If that sell signal is above the 50, the odds are against you that it will work. Now, once again, does this mean it never works? Absolutely not. Everything works every once in a while. But what we're looking for, once again, is consistency. All right. Just like I've said a million times before, the slot machines in Vegas have the worst statistics of any gaming, plan there in Vegas. They're the worst. But people continue to go there. Why? Because every once in a while, they'll get a jackpot, and it gives us this false sense of security that they're on track, that they're going to make a lot of money. But they're specifically designed to give you that jackpot so that you'll stay there and ultimately give all your money back. Being out of sync with the 50-period moving average is like that. All right. Every once in a while, there will be some phenomenal setups and they'll work amazingly. And you'll say to yourself, well, this stuff that Steve teaches doesn't work because I had a great sell signal above the 50 or a great buy below. But if you do that over time, just like the slot machines, you'll most likely give it all back. Remember, we're trying to instill consistency in you. Consistency will allow you to trade 30, 40, 50 years down the road. Whereas these fly-by-night methods, where you'll have a great trade every once in a while, sure, they may, make you feel good for a little bit, just like the slot machines in Vegas. But ultimately, if you continue to do that, you'll give all your money back and wind up in that 80 percentile of traders who fail. All right, here's a perfect example. Someone would look at this and say, hey, we're in an uptrend. I've got to buy it. After all that, chat room I go to, the guy loves this stock and he bought it right here. And look, the next day it gapped up. He's making a ton of money. Okay. So this is in an uptrend. I've got to buy it, right? Well, are we in sync with the market? The first thing we do is apply the 50-period moving average. Ask ourselves, where is price in relation to that? Well, price is obviously below. So even though, sure, if you were lucky enough to buy here, you had a really nice trade. But look what ultimately happened. Because the overall trend is down, you would have given that all back if you held that long enough, okay? And unfortunately, most traders do, because they're mesmerized with the great profit they have, and it starts to go lower. So they say, well, I'm going to hold on because it's been acting so well. In fact, I may even buy some more. And then they buy some more, and ultimately, they've given it all back and they've lost everything. Or in this example, most traders would say, Steve, you always say to be in sync. Well, the market is definitely going down. So therefore, I either want to bypass this or I want to look to short it. Well, is it really in a downtrend? If you apply the 50-period moving average, you ask yourself, where is price in relation to that? Price is above. So even though it may be heading lower, this is not something to view as a downtrend. This is still in an overall uptrend. And this maybe, I'm not telling you it is because there's no specific buy signal here, but it actually may be a buying opportunity. So ultimately, if you had shorted, let's say here, you would have felt good for a couple of days, but what happened after that? If you had stayed short and shorted more, you would have ultimately given it all back. This is the way most traders trade. This is the reason why most traders are in that 80 percentile. You're out of sync with the market. So that's component number one. I just gave you a brief review of what we went over in last week's hourly presentation. Now, we're going to talk about component number two, because component number one told you the overall trend. Okay. Now, component number two goes down to the short-term trend. And what you want to do is have both of those in sync. Now, most traders think, well, Steve, I know how to do that. I look at a weekly chart, and then I wait to see that the daily chart is in sync with the weekly chart. That's how I know I'm in sync with the trend. Well, once again, I've said this a million times. I have found no consistency in using that style. And in my opinion, it's a myth. It's an urban myth. I have found no consistency in waiting for one time frame to confirm or to be in sync with a lower time frame. To me, it's a waste of time. Here is a simpler way to do that, and you can only look at one chart. You don't have to have two different time frames. This can all be on one chart. And component number two is the top bottom 25% bar. Now, once again, you all have access to this already. You just have to know how to identify it. This is a specific bar that closes in the top 25% of its range. When it does that, and when it is above the 50-period moving average, it is just saying that it wants to go higher on the short term. As we look at this bar right here, it doesn't matter whether this is a weekly bar, monthly bar, or a tick chart. It makes no difference. But what you want to do is divide it by 4 separate equal parts. And if you close in that top 25%, the market, that bar there, not me, not some guy in a chat room, not some earnings report, and not some guy on TV, but the market, the source of what you're trading, the only thing you really should be listening to is telling you it wants to go higher on the short term. It's that simple. Now, when a bar closes in the bottom 25% of its range, the market is saying it wants to go lower on the short term. So therefore, if we see a bar like this, once again, makes no difference what market it is. Could be euro, dollar, it could be Bitcoin, it could be IBM. It makes no difference. But when you divide by 4 separate and equal parts and close in that bottom 25%, what is the market telling you? The source of what you're trading, not some outside noise. What is the market telling you? It's saying it wants to go lower on the short term. Now, here's the beauty. You can combine these two things together. Component number 1, which tells you the overall trend, and component number 2, which I just shared with you, the top bottom 25% bar, which tells you the short-term trend. And when you combine these both together, you have the makings of a very, very consistent strategy, okay? You don't have to change your strategy. I don't care if your strategy is based on fundamental news. I don't care if it's based on the full moon. It makes no difference. But if you add these two things by applying the 50-period moving average and then by looking for bars that close in the top bottom 25%, you'll really increase your odds for consistency. So this is what we call the second component of a consistent strategy. Once again, you don't have to change anything. You just have to add these things to your current method. Now, let me show you some examples here. These are older examples of components number 1 and 2 applied together. But the one thing I want to just stress, this is not a strategy. These are two components or pieces of the puzzle that you can use or apply within a strategy. You also need other components, such as where you're going to enter, where you're going to exit, where you're going to place your stop, money management. Are you going to add to your position? Are you going to, use a trailing stop? Those are all important things that we're not discussing today. Those will be in further upcoming webinars on Saturday. But for right now, we're just talking about two important components. And guess what? These components are in a number of our strategies. If you're a member of my strategies and courses already, you'll recognize these as well. But they are not. I don't want you to start thinking, well, this is great. I'm going to start trading this Monday morning, because they're not a strategy. They're not a trading plan. They're just simply components. They're pieces of the puzzle that you need to increase your odds for consistency that you can apply to a strategy, all right? All right, with that said, remember, everything you're going to be seeing today is displayed on the PTS Primo charting platform, designed to teach traders how to trade. All right, so let's look at this chart here. Remember, these are older charts. I'm going to share with you some recent charts in just a few minutes. But I want to share with you these older examples just so you can understand the concept. Here's OSTK. Most traders would look at this who haven't attended my courses before or are listening to some guy in a chat room. They say, well, Steve, this is resistance. That course I took talks all about, support resistance. This is major resistance right here. Okay, well, is it really? Remember, when you start relying on outside sources to determine what the market's doing, that's when you join that 80 percentile. Because right here, if you apply the buy-sell line, you see how simple it is on our platform. In the drop-down menu, just click on 50-period simple moving average. We have 4 different ways to view the buy-sell line, but this is the simplest one. And then you ask yourself, for the last 5 bars, where has price closed? It's closed above the 50. Now, it's not a tremendous sign here that, yes, we're definitely going up. But for all intents and purposes, the market is saying it wants to go higher. Now, if we add the top bottom 25%, we realize in the heat of the moment, it's kind of difficult to divide every bar by 4 separate equal parts and make sure it's in the top 25%. Here's the beauty of our educational platform. We've taken all the hard work out of it for you. Click on top bottom 25% on our platform, and it'll automatically show you, when you click on signal arrow, all of those bars that closed above the 50, as we have right here. And we have 2. Even though we opened lower, we closed above the 50 and in the top 25%. These 3 bars didn't, but this one did as well. Now, here's one thing I want to point out to you. This is just an observation. Once again, I don't rely on statistics, so it's not been statistically proven. But I have noticed when a bar is either very close to or touching the 50-period moving average, and at the same time, it closed in the top or bottom 25%, that's giving you a clue as to which direction it wants to go. Now here we have actually two bars. This bar is intersecting or touching the 50-period and closed by the green arrow in the top 25%. And this one is very close and closed in the top 25%. And look what happened in the coming weeks. Went up 45 points, okay? And as you can see, there were other examples saying that it wanted to go higher. Here's another one in SBCE, Virgin Galactic, okay? Price is above the 50. We have two bars very close or relatively touching the 50-period moving average. Now, as you can see, nothing has really happened here. The stock has pretty much just kind of drifted a little higher, but it's really not enough to give us any clue if we're looking at conventional wisdom. Most traders would say, well, I got to wait for the earnings, or I think I'll wait for that, institutional report to come out. You don't have to wait for those things when you learn how to listen to the market, because the market's always giving you clues. And right here, it gave us two very important clues. We're very close to the 50-period moving average right here, and we closed in the top 25%. This is all, once again, one click away on our platform. And look what happened. You see how the market was giving you a clue? It's telling you it wants to go higher in the overall trend and in the short-term trend. Now, here's an example in KLAC. As you see, price is above the 50-period moving average the entire time. So obviously, we are in an overall uptrend. But look what happened. While price was falling, there were no bars that closed in the top 25% until this one. That was your clue that it wanted to go higher, and look what happened after that. You see how the market gave you a clue that it wanted to go higher? The overall trend was up, and we had the first bar closing in the top 25%. Right here, you could have simply waited for this bar if you like this stock. And once again, you have to have a trading plan. This is not a strategy, so I don't want you to start trading this on Monday, but you have to have some trading plan if you like this. And if your strategy currently said to buy it, and let's say it gave a buy signal here, well, how well do you think you would have done? Not very well, right? If you had simply waited for that first bar that closed in the top 25%, then you could have purchased at a very opportune time. And then finally, that chart we opened up with in BIDU, once again, all of the bars, even though initially they were going lower, they're above the 50-period moving average. And look what we have here, a number of bars very close to or touching the 50. So this was a clear-cut sign that the stock wanted to go higher. Now, this is not a predictive tool. It doesn't tell you how high, it doesn't tell you how low, it doesn't tell you when it's going to start, doesn't tell you when it's going to end. It's just giving you clues so you can make your own decision. Remember, our job as an educator is to provide you with sound fundamental education that has stood the test of time so that you can help make your own decisions. And that's what we're trying to do with these two components. But anyway, at this point, the market, not me, not some guy on TV, not an earnings report, the market was telling you the overall trend is up and the short-term trend is up as well, because you have a confluence of bars closing in the top 25% that are very close. And look what happened, okay? Now, this can work to the downside, because what happens if we go into a bear market? What happens if we really start to go lower and the market all of a sudden dries up and is headed south? Well, we just reverse the process. Once again, we're looking at an older chart in Facebook. Now, we're only looking at two bars right here, but if we apply the 50-period moving average buy sell line, we see that this initial bar is below. Now, in last week's course, I said, as a rule of thumb, you need 3 to 5 closes above or below to tell you the overall direction. That's still true. And that's, especially for beginners, we want you to practice that. But at the same time, if we apply the top bottom 25%, this will give us a better edge, and it will give us a more advanced view as to what's going on. Now, we have a bar closing in the bottom 25%, and it's intersecting. So even though this is a more aggressive approach, it's not as conservative, it's still giving you a clue as to what the market wants to do. And the stock ultimately fell 27 points. The same process is right here. Now, initially, price was below the 50 period. I didn't go back in time here to show you all these bars, but we were below the 50. And here we intersected it and closed in the bottom 25%, generating a red arrow, telling you that the overall trend and the short-term trend are in sync. This is telling you it wants to go lower, and the stock fell 15 points in the next 4 days. Another example here in CTAS, okay, that price was initially above. Once again, a rather aggressive approach where you have two bars intersecting the 50-period moving average. Remember, to trade this conservatively, you need 3 to 5 closes below. We only had 2 closes below, but we had aid in that the bottom 25% bars were closing there. So this was a tremendous clue, and the stock fell 35 points. Now, let me show you really quickly some other markets, because I know not everyone just trades stocks. There are futures traders we have all over the world. We also have currency pair traders. We also have Bitcoin traders. So let me just show you some examples here and how this can be applied. Here's an older chart of the euro dollar, a 1-hour chart. Obviously, in hindsight, we're going lower, right? Well, once you apply these two components, you would have seen that we knew well in advance we were going lower because price was below the 50. And we knew right here that we had intersected. So this was a great clue coming from the market that we wanted to go lower. And look at all the bars that closed in the bottom 25%. The market is telling us it wants to continue to go lower. Here's a 1-minute chart of the E-mini futures, an older chart. Once again, in hindsight, it was going lower. Well, look at here. When price crossed below the 50, that was our clue that we wanted to go lower. But here was a clue also that we wanted to go lower with the short term. We intersected that 50. And then lastly, here's a 2-hour chart of Bitcoin. Right here, we had an intersection. We had closing in the bottom 25%. And then that's the aggressive view, but we still were maintained at this level right here. We could have gone short, and look what happened. Here's another time where we were very close to or intersecting the 50, and we went straight down. Here's another time, and then we went lower. Now, what I want to share with you are some recent charts. This is using our PTS Primo charting platform. I'm going to show you the 4 charts we looked at last week. Specifically, these were looking at component number 1, the buy-sell line overall trend. Now let's see how we could combine the short-term trend with the top-bottom 25% bar and show you those exact same charts and show you what happened this past week. Now, please remember that I'm going to show you this, but once again, I can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. And as always, all examples, since we are an educational company, all examples are specifically for educational purposes only. Now, let me just go over here to this new share, if I can do this. I hope you're all able to see the screen right here. I have a chart of ISRG. If you can see that okay, once again, I'm new to Zoom as well. Just type in yes or no, but I just want to make sure I did a presentation, as I said last week, a while ago, and I thought I was sharing charts and no one could see anything. Okay, I'm seeing some yeses. Okay, thank you so much. I'm doing it correctly. All right, here's one of the charts we looked at last week, ISRG, okay, Intuitive Surgical. Now, obviously, in hindsight, it's been going straight up since the summer, since June. How could we have known this in advance? Not knowing exactly where a bottom is or where the top is, but just knowing that it wanted to go higher on the overall trend. Well, we click on the buy-sell line, and instead of clicking on the 50-period moving average, which is the easiest, let me show you probably our most popular feature, which is the fluid buy-sell line. What this does is it paints the screen blue when anything above the 50 and anything below the 50, it paints it red. So there you have kind of this color coordination. It makes it a lot easier to find out whether the bias should be to the long side or to the short side. Now, obviously, we knew well in advance that it wanted to go higher on the overall trend way back here, and it continues to go higher. As you can see, we are still going higher and higher because we're above the 50. Now, we're getting close to that point where we may be crossing over, but until then, we are still above. Now, what we want to also look at is the short term. So let's click on top bottom, click on signal arrow, and look at all of the up arrows here. This is telling you all of the bars that close in the top 25%. Now look what happened right here. We got very close to the buy sell line, and we have another one. And look at how it gave you a signal right here, roughly at 10:30, and it bounced about a good 20 points there. I know this is expensive stock, but I'm just sharing with you just for educational purposes to show you how this worked. Let's pick another example here. What we looked at last week in SAM. This is the Boston Beer Company, Samuel Adams, okay? Once again, in hindsight, sure, easy to say we're in a downtrend, because we've been going lower for the last 4 or 5 months. But how could we have known right here that we were in a downtrend? Well, click on the buy sell line, click on fluid, and look at this. We knew well in advance, way here when the stock was trading around 1100, that it was telling us for the overall trend, it wants to go lower. So there's absolutely no reason to be long this stock. If you were long this stock in your portfolio, the market's telling you, you may want to exit or maybe lift your stop up or maybe sell a portion of this because I want to go lower. Remember, it's not somebody in a chat room. It's not some earnings report, and it's not even me. It's the market telling you it wanted to go lower. See, this is the thing we never listen to. We're never trained to listen to that. We're only trained to listen to some guy on TV, or we're trained to listen to some convoluted indicator. We have no idea what it's based on. But if we're trained to listen to the market, it's so much simpler. Now, that's the overall trend. If we want to find out the short-term trend, click on top bottom and look at all the bars that close in the bottom 25%, which continue to tell us it wants to go lower. Now look at the bars that were close to the 50-period moving average, okay? You see how these clues can really help you? Now, if you start to see a number of bars here that are not having a red arrow above them, well, then that's the market telling you that the short term may be changing its mind. But you still have to wait for it to be above the buy-sell line before you can, start to view this with a positive time frame. Now, let's look at Peloton, okay? Obviously, this stock has been going lower. Could the short-term tool, the top bottom 25%, have helped us at all? Well, we click that on, and look, we were below the 50. Look right here. We touched and intersected, and look what happened right after that. Went straight down. Now, once again, last week, I was tweeting about this, how we touched and intersected, and I said, until we are fully above the buy-sell line, it is telling us it wants to go lower. And I got a lot of responses from people watching my Twitter saying that, well, how can you know that? It looks like it's been going straight up. Look at these 2 big days here. This is positive news. Well, what happened to that? Now, I'm not saying that it's not going to go back up. It may go back up in this next week. I don't know, but I'm just listening to the market on a moment by moment basis. And as it is telling me, I'm just reporting back to what the market is. It's not my opinion. I'm not forecasting any opinions of what I think. I have no idea what this company's going to do, but the market is telling me it wanted to go lower. And right here, I tweeted that it wanted to go lower, and it fell roughly from 110 all the way down to 103. So once again, this will help you make your decisions. These are not strategies. These are not telling you when to buy or sell. They're just helping you to make your own decision. Now, I want to share with you this chart here. This is the diamond. That's the ETF that represents the Dow Jones Industrial Average. Now, obviously, going back to the summer and August, and so we were above the 50, and look at all the short-term bars telling us we want to go higher. Now, all of a sudden, the past week or so, we started to go lower. There's no up green arrows anymore. And what do we have here? This was on the 9th and 10th, okay? Now, that was actually last week, last Thursday and Friday, previous last Thursday and Friday. And we had 2 bars here. So this is a aggressive approach. Remember, we need 3 to 5 bars with the overall trend. But this was an aggressive approach telling us it wanted to go lower. And let's see what this happened this past week, all right? So wasn't that a great clue, knowing that most likely we're going to continue to go lower? And this was up until yesterday. And look what we have here yesterday. We have another red arrow. Now, this is on the Dow Jones, okay? So this is not the actual indice. This is just the ETF that represents it. Let's look at the spiders, which is the ETF that represents the S&P 500. Now, currently, this is the chart. If we apply the buy-sell line for the overall trend, well, price has been up above it except until Friday. We closed below it. Now, remember, for beginning students and for a conservative approach, we need 3 to 5 closes below to tell us the overall trend is down. But if we apply the short-term tool, guess what? We have an intersection, and we also have a red arrow telling us that we closed in the bottom 25%. So this is a negative warning sign. Does it guarantee that we're going to go straight down the next week? No, we could bounce right back up. I've seen that happen many times. But just be careful, because this is what the market's telling us. Not me. I'm not making any predictions, not some earnings report. The market is telling us that most likely This is a big red flag. This is a warning sign to be very careful. Now, the Dow Jones did this already last week ago, and look what happened to the market this past week. The S&P hasn't done this yet. It just did this yesterday. So this is something to take into account to help you make your own decision. If you're currently long, or if you're thinking about long, this may help you make a decision as to what you want to do. Remember, our goal is not to tell you or force feed you signals or tell you what to trade, not to tell you what to buy or sell. Our goal is simply to teach you these things so that you can make your own trading decisions, okay? That's what we're doing here, and that's what the entire point of our courses. Now, as I go back to the original presentation, once again, let us recap what we went over in these past 2 weeks, talking about these two components. First of all, component number one, you will have a higher level of consistency if you only buy above the 50-period simple moving average and only sell below the 50. It does not matter what strategy or technique you're trading. It does not matter what market you're trading. It does not matter what time frame you're trading. But you will increase your odds for consistency by applying component number one. Component number two, when a bar closes in the top or bottom 25% of its range, it's telling you which direction it wants to go on the short term. So what you want to do is simply apply these two components together. If you are above the 50-period moving average, if your price is above, then you want to look for bars that close in the top 25%. If you're below, then obviously you want to look for bars that close in the bottom. This is how you have the overall trend and the short-term trend in sync. There is absolutely no reason to look at a weekly time frame and to make sure that the daily time frame is in sync. There's no reason to look at an hourly bar and to make sure that it's in sync with a 5-minute time frame. All right. Remember, I have applied those. I was, using that urban myth 40 years ago, and it couldn't help me at all. So I don't really use that. I've never taught that. I know a lot of people, live by that rule, thinking that, oh no, Steve, that really helps me. If it helps you, then feel free to use it. I'm not here as a teacher to tell you what not to use. I'm only here to share with you things that have worked and that have helped me. Now, when you combine these two components, you have the makings of a high probability setup, because you can use these as a setup within your strategy. But remember, this is not a strategy. You still need those other pieces of the puzzle to have a full-fledged strategy. So please do not start trading this on Monday. These are only signals. These are signpostings helping you make your own decision. So as a homework assignment, for the last 2 weekends, we've talked about these two components. I want you to study and research these two components and go back and look at your last 10 to 20 trades. Now, paper trade to see if your results could have been improved by applying these edges. I can almost guarantee you that they would have tremendously. This is how you become a consistent trader. This is how you leave that 80 percentile and hopefully get into that 5 percentile where you're consistently generating profits. All right, so ask yourself, do you think these simple components can help your trading for the remainder of 2021? Okay, less than 4 months to go, people. There's little time to improve your trading, but here's the good news. You can start right away, especially with a great offer we have for all of you attending. We're going to offer you our Secrets of a Stock Exchange Specialist training sessions, okay? This is 3 hours of trading techniques plus a full-fledged strategy. And remember, up until today, I've just been talking about components, just about edges, but I haven't talked about actual trading rules, actual trading method you can use. Here's the good news. In today's offer, you are going to get a full-fledged strategy. This is strategy number one. Let me share with you an example. Strategy number one is a pullback method, one of our most consistent pullback methods, designed to buy at lower levels within an overall uptrend. For example, most traders would look at this and say, hey, we're in a downtrend, Steve. I want to be in sync with the market, like you say, right? So I don't want to buy anything. But strategy number one generated a buy signal right here, and the stock went up 13 points in the next week. You're going to get the full rules, knowing exactly where to buy, where to exit, where to place your stop. Works on the downside as well. If we happen to go into a down market, if you like to buy puts or some type of spread strategy to the downside, looking at this older chart of VRSK, someone would say, well, Steve, this is going up, higher highs, higher lows. We're in an uptrend, right? Well, according to strategy number one, the trend was down and 2 sell signals were generated right here at the top. You could have taken advantage of them before the market fell 30 points. So you're going to get the complete rules to that, but we're not going to stop there as well. We're going to give you a great offer because this is just for $99.97. That's the normal price, $9.97. We're going to discount it down to $37. So we're not going to just stop by giving you a great offer, giving you something great to learn. We're also going to give you a great discount. Think of it, $37, okay? Most of you lost way more than $37 this last couple of days. I can almost guarantee that. For $37, you're getting over 40 years of things I've accumulated, a lot of different edges, such as more high probability trading edges, which indicators to use, which ones not to use, the difference between a system and a strategy, the #1 chart pattern, how to be on the right side of the market, plus the complete rules to strategy #1. All right, you can apply it to any market, any time frame, and this all comes with educational correspondence. So this is a great offer. We're discounting it down from $9.97 down to $37. So take advantage of this, okay? This is a great offer. Once again, contact Pro Trader Strategies. They have trading consultants operating the phones right now. They'd be happy to take your order over the phone. All you have to do is just call them up at 310-598-6677. They'd be more than happy to answer any questions concerning what you're going to get. And they'd be more than happy to send you out all the information as early as today. In the next couple of hours, you could be up and running and studying all these things and learning how to trade strategy #1. Now, the link you see at the very bottom is the link that will take you to the info page and the sign up page. It's not a live link, but we've just posted a live one in the chat box. So if you don't want to have to copy and paste that link at the bottom of the screen, just go to your chat box right there, click that on, and it will take you to the page, okay? All right, now, since we're at the end of today's presentation, if you have any questions concerning what I went over, now's the time to ask. I promised I would answer your questions at the very end. The main thing I really want to stress is that please do not start trading this, because most traders will lose money because they think it's a strategy. You still need to have money management components, which I've talked about in other Saturday webinars. You still need to know where to plan your exits, which I've talked about as well. You still need to know exact entry points, which I've talked about as well. So those are all important pieces of the puzzle. This is just the main ones where you want to be in sync with the market. And in my opinion, these are the most important, because once you know how to be in sync with the market, then it's easy to apply, if you've been trading for some time, different entries, exits, and stop placements, okay? Okay, we're getting one of the most common questions I get, and that is, in the offers, Steve, you stated you would get educational correspondence. What is that? That means basically that you are going to get my personal email address. You can contact me whenever you'd like. And I know that a lot of websites will do this. They'll have an email address or a phone number. Most of the time, when they provide those things, what you're doing is you're contacting an intern or an assistant, but not the actual person who is in charge of developing the strategy or trading the strategy. That's me. So if you're really going to become a student of this, you're going to really contact me. I mean, all the emails come to me. They don't come to an intern or someone that's just working for a part-time job. They come directly to me, and I answer them personally. So even for $37 discounted course, such as the one we're offering today, you will still have direct contact with me via email, and you can email me whenever you like. The weekend, before the market open, after the market close, and I'll get back to you as soon as possible, okay? So that's what educational correspondence means. It's like having your own personal mentor. It's a great thing, and as I stated, you're having direct contact with me via email, okay? If there are no further questions, let me just scroll down here once again. Oh, I see I have another one. I've been very happy here. I have more than one PTS Primo strategy that I'm very happy with, but it is even more ideal to increase consistency to look at both multiple PTS strategies at the same time for the same chart. Well, remember, this is your personal decision. I'm not going to teach those. I personally don't trade that way, and they haven't helped me. I don't look at different strategies at the same time, but I see nothing wrong with that. In other words, if you have now we have combinations such as a candlestick combo. We also have the dynamic duo, but those are different techniques with different methods combined, but they're not two specific strategies. They're just two specific ways to trade, and then we combine them. They're two methods combined. But if you're talking about actually getting confluence with one strategy gets a buy signal and another one does, I actually see nothing wrong with that, but there just hasn't been enough information with my viewing of these that will really increase tremendously. Now, I know we have a number of students who've already told us that certain strategies together help tremendously, and that when they get a buy signal with this one and a buy signal with another one, it's a high probability setup. Well, that's great. I just haven't had enough time to really research and see that there's a lot of information behind that. But if you see that it works for you, then that's fine. Then go ahead and use it. Remember, even for things that I don't teach, such as, like I said, looking at different time frames, if you feel that it strongly benefits your trading, then by all means continue to use it. It's just that I have never found anything that works under that realm for me, and therefore I don't teach it. But let's say, earnings reports, let's say fundamental news really helps you. Well, remember, none of our methods require any information with fundamental or, any internal workings of the company. So it's not required at all. But if it helps you, I'm not going to sit here and tell you to stop using it. So once again, this is a personal decision with all traders. If you find out that you have multiple strategies when they have a confluence of signals and it works for you, then by all means continue to use it. Okay, I hope that answers your question. And I'm glad that you're very happy. That's what we want to do as an educational company. Okay. Any more questions? Let me just scroll here really quickly. Well, I guess that brings us to the end of today's class then. If there are no further questions, remember, if you're really interested in taking your trading to the next level, remember, 3.5 months left to go. If you're not seeing the type of results you wanted to at the beginning of the year, here's a way to turn your trading around. You're getting over 4 decades of edges, of tools, of methods that I've accumulated in today's promotional offer, and for such a great price. $37, most likely if you went out to lunch today with a friend and bought lunch and a couple of drinks, it would cost you $50, $60. But you're getting 4 decades of trading information here that's priceless for less than $40. So this is a great offer. Take advantage of it. The quickest and easiest way to come on board is to call Pro Trader Strategies, 310-598-6677. They can take your order over the phone and you can be up and running in just a few hours, okay? Well, I want to thank you so much for attending today. I really hope you learned something. Remember, we're an educational company and that we're just trying to show you how sincere we are in trying to educate you. But more importantly, I look forward to all of you becoming students of mine in either a course or the Secrets fundamental course, or in anything that we teach. We just really want to educate you as traders. Thank you so much. Have a great weekend, and I'll see you next time. Bye-bye.